What's next for the European equities? Is the worst over? Let's get insights from Willem-Mark Nabarro, head of European equities at Exane BNP Paribas. He joins us here in the Lion City. First off, people still skittish about the Euro region. Have you seen the worst?
I'm not sure if you have seen the worst. We'll see some more effectively ups and downs, and probably some downs as well, as long as effectively this famous package is not announced yet. We have seen, of course, because of the cacophony coming out of Germany, where effectively Mrs. Merkel is facing elections on the 9th of May. That's also she doesn't want to give an image which is too weak, directly giving money to Greece, which is not going to be seen very well by the man in the street. And that's effectively why we have still this problem going in Europe. Mrs. Merkel also knows effectively, and the German population knows as well effectively, that the defaulting of Greece is not a solution, because effectively there will be at the moment of stage, of course, the domino effect. So something will come out. That's also why we have seen effectively Mr. Strauss-Kahn yesterday in Berlin, and we have seen also, of course, Mr. Trichet there. So there is, of course, a lot of puppeting going on behind the screens, which we do not see. But a solution will be found.
Is contagion still the key risk in the market?
It's the key risk if you listen to, for example, Dr. Doom, who just spoke as well, but it's definitely not the case. If we look really in details in the deficit levels of the other countries around in the Euro region, they are not as bad as they are in Greece. They're talking about Portugal. Portugal is 77%. It is lower than, for example, France. It's lower than, for example, the UK, which is lower than Belgium. And those are countries we do not talk about. But effectively, they have got this image of Club Med countries. If we look at Portugal, also what they have done in the past, they have brought their house in order. So why is this focus the whole time on Portugal? I think it's the wrong one. It's the easy one. It's something reminding me what we have seen in the past when we had the Asian crisis, attack, say, the easy ones and not directly the more difficult ones.
So what would it take for us to see a rebound in European markets?
Well, first of all, we have to have this very firm commitment coming out of, say, Germany, but not only Germany, but from the whole European front. That means Germany, means France. It means the two key countries, with effectively also Mr. Trichet there and the IMF also in saying, oh, this is it, and now it's over. And also, if effectively, well, what is interesting to see that the Japanese market is performing so well, but look at the Japanese deficit. It is horrendous. If you compare it to Europe, it's worse. So why is everybody focused on Europe at this moment of stage? If effectively we're talking about deficits, look at that moment of stage of Japan, look at this moment of stage in the US, because it's much higher, it's much bigger.
So what are you saying? Buy into European stocks right now? I mean, given the recent correction, valuations are looking pretty attractive.
Valuations are looking very, very attractive. It also depends on your time horizon. If it is for 1-2 days, no, because it is very, very volatile, then it's pure stock picking. If you have a longer term horizon, yes, it is becoming very, very interesting to pick up stocks again in Europe.
When I look at your stock picks, you seem to like drug makers. What's the story there?
Well, drug makers effectively, because of, the situation is not very clear, but it will become clearer as well. Also, because, of course, demographics, we have seen, of course, people live longer and longer. We have seen what is happening in the US as well, of course, with the healthcare reforms. So also what we see happening over here in Asia, where people get more and more money. They don't want the copies anymore. They want to have the real drugs. So automatically, those guys will be very, very good performers. Also, if you look at them, they've got very good credit ratings. Everybody's looking at it as well. Look at the very strong balance sheets they have as well. Look at the very high free cash flows. Look at the dividends they are paying as well. So fantastic opportunities to invest in them. Most of the stories about patents going off or drugs going off patent, we know about that, all priced in. There is nothing new about that one. And also you want to look, of course, at the companies with the strongest pipelines. Look at Novartis at this moment of stage. Look at Sanofi, which is a very, very good value story, fantastic value story. Look at Roche as well. And you can also look in the healthcare providers, where we will be looking at Fresenius Medical Care and SE, or also we will be looking at Smith & Nephew. Very interesting companies, very strong, very good valuations and very strong growth.
Good valuations, interesting, but yet there's a risk. I mean, there's a risk that they're of a rating cut because of the spending spree recently.
Well, If you want to go for that effectively, if I look, for example, Novartis, which is a very high rated company. If I look at Roche, very high rated company. Swiss, stronger than an ox. I don't see a real problem in there. Smith & Nephew, I don't see a real problem in there. If I look at Sanofi-Aventis, I will be very surprised if there's going to be a credit cut. I'm going to be very surprised if Fresenius is going to have a cut as well. So I don't really see that happening.
Let's pick up on some of the names that you threw up earlier. Sanofi, down 6% year to date, not looking very good. Well, how much upside are we looking at?
We're looking at least at 25 to 30% upside from here. So effectively, this is a screaming buy. That's what we are saying as well. It is not a surprise because the whole market has been going down. Effectively, the sector has been going down. Everybody has been putting his money more in cash than anything else. But effectively, if you look at, say the people with longer term views, they are definitely coming back and they are definitely putting money on the table effectively in this kind of sectors, as they are also putting money now on the table. And I would definitely suggest also to put money on the table on, for example, construction and building. If we look at the latest figures coming out of the US, if we listen to what Mr. Bernanke mentioned yesterday as well, if we see that growth is definitely coming back in the US, especially construction and building sector, that is a sector you want to be in as well. And then you can buy the whole sector, and we will be looking at names which are effectively which have exposure to the US. You will be looking at that moment of stage at Heidelberg Cement, for example. You will be looking at Wolseley. You will be looking at CRH. And in a different one, which doesn't have that much exposure to US, but very interesting in valuation and very strong growth prospects, would be Saint-Gobain as well.
Willem Nabarro, thank you so much for your insight on the trade today. We're off.